The abstract is about to explore how Islamic banks in Malaysia manage Sharia compliance risks. It examines how these practices reduce on compliance risks, build trust, and strengthen credibility while identifying areas for improvement. Using a qualitative approach, we interviewed key officers from Islamic banks to understand how they manage risks. The study applies institutional and contingency theories to analyze practices like risk identification, monitoring, and reporting. Findings reveal that while Islamic banks use risk management processes similar to conventional banks, ensuring Sharia compliance presents unique challenges. Risk identification is the most critical step, supported by regular monitoring and reviews to uphold Sharia principles. The study focuses on Malaysia, but future research could expand globally to gain deeper insights into Sharia compliance practices. Implementing a standardized Sharia risk management framework and encourage Bank Negara Malaysia to issue clear, detailed guidelines. These steps will enhance transparency, consistency, and adaptability. Sharia compliant risk management is vital for Islamic banking, ensuring credibility, trust, and sustainability both locally and globally. Sharia compliance risk management, Sharia governance, Islamic banking, risk identification, regulatory framework, and Bank Negara Malaysia are the keywords for this abstract. That's all from me. Thank you.
Okay, for the introduction, risk management is a critical aspect of the financial industry, aiming to identify and assess potential risks that may threaten financial stability. Risk management in Islamic banking must be in line with Sharia principles, which place a strong emphasis on moral conduct and social fairness. This study focused on assessing the effectiveness of Sharia-compliant risk management practice in Islamic bank. Okay, next for the background. First, risk management challenge. Specific difficulties for Islamic financial institution in risk management. Second, innovative Sharia-compliant alternative. Need for Sharia-compliant alternative for effective risk management. And the third, Islamic banking growth. Significant global growth as an alternative to conventional banking. For the problem statement, first, constraint in Islamic banking. Dual constraint, financial risk plus adherence to Sharia principles. Second, trust and stability concern. Impact by customer and employee perception of risk management. And the third, risk management challenge. Limited Sharia compliant hedging instrument, strict strategies, and last, role of regulation. Regulatory guidance is crucial for shaping effective practice. And for the objective, first to evaluate the effectiveness of existing Sharia compliant risk management practice in Islamic bank. And for the second, to identify factors that influence the adequacy of risk management tools used in Islamic finance.
For location of study, our study focused on Malaysia, which is one of the leading countries in Islamic banking and finance. Malaysia has a strong regulatory framework and wide variety of Sharia compliance financial institutions, making it the perfect place to study risk management practices. The country also play a major role in setting international standard for Islamic finance. By focusing on Malaysia, we can explore how these practices work in a well-developed market and get an insight that could benefit the global Islamic banking industry. Moving on to the methodology, for this study we use a secondary research approach. Instead of collecting new data, we review existing journal articles about Islamic banking. We pick articles that were peer-reviewed and focus on specific challenges like managing risk while staying Sharia compliant. Then we use thematic analysis to organize the key ideas and issues into themes. Finally, we develop a conceptual framework to tie all the findings together. While we face some limitation, like the availability of recent articles, our analysis still provides a clear and structured perspective on the topic.
The significance of this study is to evaluate effectiveness of Sharia-compliant risk. It also addresses demand for secure financial systems. It provides evaluation of current risk management tools. It also informs efforts to strengthen capacity. It assesses Islamic banking in strengthening risk management. The organization of the study is, for the chapter 1, is outline the study background, purpose statement, objective, location, method, significance, and organization of the study. Chapter 2 is the literature review, where explore existing literature on Sharia compliant risk management and practice. For the chapter 3 is to develop a conceptual framework linking dependent and independent variables and explain its relationship. For the chapter 4 is the conclusion to summarize key findings and offer recommendation. For the chapter 5 is the reference, where all the reference and citation used in this study.
Next is literature review. There are 7 main topics, including effectiveness of risk management practices in Islamic banking, availability of Sharia-compliant hedging instrument, perceived adequacy of current risk management policies, reliance on sukuk for risk diversification, training and expertise in risk management, regulatory support and guidance, and lastly, perceived impact of risk management practice on finance stability. For the conceptual overview, there are 6 main attributes that the effectiveness of Sharia-compliant risk management practices in Islamic banking. One of them is Sharia governance, which ensures the compliance with Islamic principles while mitigates the excessive risk-taking. Second one is risk management tools and practices, tools like sukuk, murahaba, and ijra. And the third one is institutional and regional influence, which regulate the effect risk management consistently.
Fourth, innovation and technology play an important role. Tools like fintech, artificial intelligence, and big data help Islamic bank adapt and manage risk better. AI-based analysis and Sharia-compliant platform make banking more efficient while staying true to Islamic rules. Fifth, training and expertise are crucial. Programs like the Certified Sharia Auditor teach professionals the skill they need to handle complex risk management, making sure practices are effective and consistent. Lastly, regulatory support from organizations like AUFI, IFSB, and Bank Negara Malaysia provides clear guidelines. These rules help Islamic banks follow Sharia principle, stay financially strong, and be sustainable. This conceptual framework identifies 6 key factors influencing the effectiveness of Sharia-compliant risk management in Islamic banking. Together, these factors strengthen risk management practices in Islamic banking.
Islamic banks operate within a dual framework, managing conventional financial risk while ensuring compliance with Sharia principles. Challenges arises from the scarcity of Sharia-compliant tools and over-reliance on instruments like sukuk for diversification, inadequate training, and inconsistent regulatory support contribute to inefficiencies in risk management. However, the study does have limitations. It primarily uses secondary data, which limits insight into real-world applications. There's also a lack of focus on regional differences and the evolving nature of fintech and regulations, which may affect the long-term relevance of the findings. To address these, we recommend expanding research scope with primary data, creating region-specific frameworks, improving training programs, leveraging technology for advanced risk management solutions, and strengthening regulatory frameworks to better accommodate diverse markets. In conclusion, by filling the gaps in training, regional customization, and research, Islamic banks can enhance resilience, align practices with Sharia principles, and ensure financial stability in a rapidly changing environment.